Let's dive into one of the highest monthly dividend stocks and see if you should buy it or forget about it. This stock has over a 19% forward dividend yield. Is it a buy, or should you forget about it and move on to other less risky monthly dividend stocks? The stock I am referring to is Broadmark Realty Capital, ticker BRMK. Broadmark Realty Capital Incorporated is an internally managed real estate investment trust. It provides financing to real estate investors and developers across multiple regions throughout the United States. The firm offers short-term, first deed of trust loans secured by real estate to fund residential or commercial property acquisition, renovation, rehabilitation, or development. The company has been around since 2010 and is headquartered in Seattle, Washington. In this uncertain economy, investing in a company that focuses on providing hard money loans could seem like a risky decision. The situation is further compounded when such a company cuts its dividend payouts by half, and investing looks like an even more difficult prospect. Looking at Zacks research, they rank Broadmark with a 4 sell and an overall VGM score of F. Looking at the daily chart, it has been on a downward spiral over the last year, well under the 200 daily moving average. Moving on to see how Tip Rank scores Broadmark, they give it a 2, underperform. Based on 5 Wall Street analysts offering 12-month price targets for Broadmark Realty Capital in the last 3 months, the average price target is $4.38, with a high forecast of $5 and a low forecast of $3.75. The average price target represents a 12.60% change from the last price of $3.89. Broadmark Realty Capital's market cap is currently $526.37 million. The company's earnings per share trailing 12 months is 44 cents, its PE ratio is 8.95, and it has a dividend yield of 19.44%. Broadmark Realty Capital is scheduled to report earnings on March 15, 2023, and the estimated EPS forecast is 12 cents. Last quarter, Q3 2022, their total revenue was $27.13 million, a decrease of -11.33% from the previous quarter. In Q3, their net income was $2.61 million. Broadmark Realty Capital's total assets for Q3 2022 were $1.23 billion, a decrease of -1.69% from the previous quarter. Their total liabilities were $128.26 million for the fiscal quarter, a 2.35% decrease from the last quarter. Their free cash flow for Q3 2022 was $15.64 million. For the 2022 fiscal year, their free cash flow decreased by -$149,000, and operating cash flow was $15.65 million. Broadmark's last ex-dividend date was December 28, with a payment date of January 16. You'd received 4 cents per share, representing a forward dividend yield of 19.44% at the current share price. Their past year's earnings per share were 44 cents, and their annual dividend per share is 77 cents. Their dividend payout ratio is 126.33%, which is not sustainable. Let's input the dividend payout into the dividend calculator. We'll buy 1,000 shares, with a total investment of $3,890. We'll hold the investment for 10 years and reinvest the dividends into the DRIP strategy. After 10 years, we would have an ending balance of $26,768.46, a total return of 588.14%, averaging an annual return of 58.81%. Looking at news and insights, most of the current news is neutral, with the most significant announcement being the New York Stock Exchange delisting the company's warrants due to low selling price levels. The CFO's last insider buy-sell was last month, which was an uninformative buy. Broadmark's investor sentiment is very negative. The average age of investors is over 35. Based on the 13F filings of 475 hedge funds submitted to the SEC, hedge funds decreased holdings by 536,000 shares last quarter. Broadmark's blogger sentiment is based on 8 blogger opinions. The blogger sentiment is more bullish than other stocks in the financial sector. Public companies must disclose risks affecting the business and the stock. These disclosures are known as risk factors. Companies disclose these risks yearly, Form 10-K, and quarterly earnings, Form 10-Q. Risk factors show the challenges a company faces. Investors can consider the worst-case scenarios before investing. Broadmark Realty Capital disclosed 71 risk factors in its most recent earnings report. Broadmark Realty Capital reported the most risks in the finance and corporate category. The company's debt-to-equity ratio is only 0.1, which implies that it does not have much debt to be concerned about. Nonetheless, the company's stock market price is lower than half its book value despite having a solid balance sheet. The atmosphere around the company is tense and apprehensive, likely due to its industry and its recent decision to reduce dividend payouts. Broadmark Realty Capital is a real estate investment trust, so it must distribute 90% of its earnings as dividends. This makes a continuous dividend payout likely if the company remains profitable. There is a significant risk factor for investments overhyped by a hefty dividend payout ratio. It is essential to understand the risks involved before making any decisions. Broadmark Realty Capital is an investment opportunity that rewards its investors for taking risks. All indicators taken together show that the company could be bought at a price where its investors have a good chance of making gains. So, based on the information, do you think it's a buy or would you pass, and forget about it? Let me know in the comments. If you made it this far, thank you, and check out one of my other videos.